Hello, I'm Debbie Bell-Hosking for FinextraTV at EBAday 2025 in Paris, and I'm joined by Tsvetanka Nankova, who is the Global Head of Sales, Institutional Cash and Trade Finance at Deutsche Bank. And we're talking about the importance of data going forward. Tsvetanka, welcome to our EBAday studio.
Thank you, Debbie. It's a pleasure to be here. Thank you for the invitation.
And we're talking data, one of our favorite subjects.
Very good.
So, how do you see the role of data evolving in transaction banking, and also why has it become such a critical asset?
Yeah, I think, Debbie, data, similar to AI, has really been the buzzword for the past, 10, 20 years. Data has been on the rage, really, and we're collecting exorbitant amount of data also with multiple data centers being set up in California and also throughout the globe. I do think that data will play a critical role going forward in transforming businesses, also in really helping us become much more efficient going forward. When I think about transaction banking specifically, we have a lot of information that is ultimately available to Deutsche Bank, but that's available just to the financial community. So how we utilize data to understand client behavior better, predict cash flows, ultimately schedule payments, how we use data to take better credit decisions, better and even faster credit decisions, will be very, very important. In addition to that, you can also have situations where transactions are stopped in the sanctions filter, but on the back of better data, structured data that is available now on the back of ISO 20022, you can also take faster decisions and ensure the seamless processing of transactions. But one of the things that I also learned in my econometrics classes back in the days when I was in college was that we can't just take data at face value and also some of the results that are produced by various models. We really need to interrogate the data, we really need to interrogate the models as well and understand how some of the outputs fit into our operating environment. You cannot just take one result and put it, plug it into a specific institution and expect that it runs, because we have different maturity of operating models, we have different culture. So really understanding the data, interrogating that, how we collected the data, is it internal, is it external, over how long of a period of time did we collect it, ensuring for cyclicality. It's just so much to take in, and I'm not a proper data scientist, but I do think it will play a critical role. I just want to make sure that we are actually taking the right decisions as well, because you can misread a lot from data as well.
Finding the value and finding the right decisions, or at least being assisted towards making those right decisions. And of course, you mentioned ISO 20022 there. Many banks have invested heavily in ISO 20022. What would you identify perhaps as the key value that it brings?
Yeah, excellent question. So I do know that when it comes to the SWIFT banking community, we're already seeing significant progress in the adoption of ISO 20022, and I do hope that when the November deadline comes, we're really going to see close to 100% of all banks on ISO 20022, because the benefits from my point of view are twofold. ISO 20022 will definitely ensure faster and more seamless and frictionless processing of transactions going forward. In addition to that, just being on the same common standard of financial messages will ensure that interoperability of market infrastructures, the connectivity between financial institutions, and it will really drive a better connectivity of our clients across the globe. Internally, maybe a couple examples. We're seeing our STP ratio literally skyrocket, come close to 100%. In addition to that, we're seeing fewer transactions stopping the sanctions filter on the back of better structured data that ISO is providing. Again, driving a faster processing of those transactions, faster release of those transactions. So multiple benefits, and I think more to come as more of the community adopts the standard. Really, on which technology we process transactions doesn't really matter, but being on the common standard will matter to me. Well, is the starting point and really matters even more.
Now you're talking about that common standard. You also mentioned technologies, but let's have a look at those technologies now. What are the emerging technologies that you are seeing that's going to help banks retain that competitive data advantage?
Yeah, so look, maybe just thinking about it, maybe after the internet and then after cloud, AI is the technology that is going to be truly transformational. I mean, we've seen a lot of technologies, right? I just think about the metaverse, right? A lot of hype around it, now it's gone. But when it comes to artificial intelligence, from my point of view, is going to be a technology that is very transformational and will drive change in operating models. It will definitely drive change in efficiency, but it's not going to be the technology on its own. It's really that combination between AI as well as data, as we just discussed, that will drive the industry forward. But when it comes to artificial intelligence, you almost don't have a first mover advantage with that technology, because the more data you inject into the tool, hopefully the better results you get, and you almost have a second mover advantage. But when it comes to data, the data that you own, from my point of view, is really going to be the proprietary advantage that will give us that specific competitive edge. So how we use the technology in combination with the data that we own is going to be critical in ensuring that, well, firms such as ourselves, but also just firms across the globe, have a competitive edge going forward.
We're talking about ownership of data, we're talking about the technology, we're talking about AI, we're talking about blockchain. So this question may surprise you, but in an evolving market, is this leading us to rethink perhaps more traditional methods?
Oh, absolutely. I mean, so look, a lot of large institutions are definitely not known for being extremely agile and nimble. And this is where a lot of the monoline service providers have an edge over a lot of the banks, right? We'll have to be very, very frank about that. So I think we have a lot to learn. But when it comes to the way we process transactions, when it comes to the way we think about clients, I think a mindset shift is required. And I'm just thinking even about our own institution. A payment is a payment, regardless of which clients are using the service ultimately. So we really need to start thinking more horizontally, end-to-end, in terms of how we process transactions, rather than vertically, right, in silos, which clients are using that transaction and what technology do we require. In addition to that, we need to think really holistically and end-to-end across our firms. You do an FX transaction that ends up driving a payment, right? So how can we ensure that automation and faster execution, swift execution of that transaction, really end-to-end, starting from the FX transaction? I do think that we need to take out complexity and simplify our operating models. And we should definitely look for a bit of inspiration from a lot of the financial technology companies and look for partnership with them as well. We can't do it alone.
That's a good place to end. You can't do it alone. Tsvetanka, thank you so much for joining us today.
Thank you, Debbie. It's been a pleasure being here.